Hi traders, this is Houston Trong from TradingEdge.org coming to you on July the 31st, 2019. Happy FOMC day. So the day is now done. FOMC came out, and unfortunately for the bulls, it was the worst of all scenarios. The markets certainly did not like what Powell had to say today, and it brings into focus some of the things that I've been talking about in the weekly market outlook video, as well as a chart that I posted on Monday, which it's now beginning to play out. So hence the midweek market update video. So on Monday I posted this chart here. I'll just save some screen space here. Let's turn off some of that. It is a picture of the S&P overlaid. So that's the S&P in the candlestick charts, and the blue line you see there that's overlaid is the S1FI product or index or instrument, which basically tracks, I guess it's a composite, which tracks the number of S&P 100 stocks that are currently trading above their 50-day moving average. So the stock market had been doing a pretty good job at going up with the number of actual S&P 100 stocks actually climbing up simultaneously. But around July, mid-July, we started to get that divergence. So we saw here that we started to make new highs on the S&P, in fact all-time highs, but the number of actual S&P 100 stocks that are above the 50-day began to peter off. And this last leg up, when we went from the 18th of July up into this past the last week until the 26th, we began to see this bit of a negative divergence here. And so this sets up the potential for a bit of a pullback as we have fewer leaders participating in the actual move. And we got kind of that play out today. So as I've been mentioning in the weekly market outlook video, in order for the sellers to take control, they had to begin by first taking out last week's lows for the indices or last week's highs for the VIX. And if we zoom in on the VIX here on the weekly chart, we finally got that today. So it's been a long time coming. So here's the outside bar down, and it went outside bar down and went down 1, 2, 3, 4, 5, 6, 7 consecutive weeks of lower lows. We had that inside bar there, but it was actually a red week, so I'm counting that. 7 red weeks, or at least 7 consecutive lower lows. This week we finally broke that momentum. So finally here, some buyers had to cover if they're simply trailing bar by bar. They finally took out that high. Now does this mean that the markets are going to unravel right away? No, but it's certainly time to pause and take some reflection here and see what could happen next, because at this point here, that momentum to the downside on the VIX has finally been alleviated, and the buyers just finally stepped up. Now we're still trading below the quarterly open here at 24. What's the quarterly open right there? What do we have here? Around 24.50. So until VIX can break above there, we still have that quarterly in green. So if we take a look at the 3-month chart here, let's pull it up. 3-month chart still looks red for VIX, for the VIX. So it would take quite a bit for this thing to turn. Well, not a lot. We just have to crack above 24.50, 24.55 to be exact, in order for this thing to turn green. So for now, what's important to note is that we are at we are in a new month now. So tomorrow, August 1st, marks a new month, and this is what you want to watch out for. So now that the week has turned green, we still have 2 more trading days in this week. So the market's going to fall apart right away. That's what we need to watch and see. How this would begin to transpire would be for the highs of last month to get taken out. So here, we'll just mark it. If last month's highs here, 2508, get taken out, then we're going to have an inside bar reversal to the upside. And then that puts this pivot in play, 3141. And so at that point, that would flip everything into full time frame alignment back to the upside on the VIX. So on the daily chart, on the SPY, here we have this big outside bar now to start the new month. So what happens tomorrow? It was a wide range bar today, right? So it was a lot of range. So tomorrow, does the market, simply fall apart by the VIX popping up higher, or do we go inside bar because it is a very wide bar here, or does it just come back down in the range again and just basically give a head fake to all the shorts who perhaps loaded up on VIX calls or VIX, VIX stock? Okay, SPY, mirror image, right? So we've been watching it, and I've been saying it for a while. We're waiting for the sellers to take control, and the way they're going to take control is by first turning the week red, by taking out one of the weekly lows. Just like on the VIX with mirror opposite, we had 1, 2, 3, 4, 5, 6, 7 consecutive weeks of higher highs. Okay, this week we finally broke that trend, and this means the immediate momentum that was put into force by this outside bar is now negated. So now the buyers have to rebuild if they want to take control again. They did a good job today at defending this level here, this key level. That's the quarterly open. So the SPY, as well as the Qs, as well as the Dow, they all tested their quarterly open. They broke below and it popped back up again. And so funny, I've had this broadening formation drawn for a long time now, and as you can see, it just basically tapped it exactly and popped back above that and then back above the quarterly open. Like the VIX though, this is what it's going to look like if it continues to break down. If it goes, keeps going down and it cracks below that quarterly open, and then subsequently it takes this low out, so July's low, then it puts this low in play, June's low. So outside bar and up. Now we're in August. If price opens up here, starts to go back down, takes out this low, then all this stuff comes into play, because then the sellers have all these pivots to go after there. Okay, just like the VIX outside bar on the day here. So for a while today, it looked like there was an opportunity, had the Fed signaled that they were going to be aggressively cutting rates, that it was possible for the SPY to do something like this, an inside bar reversal to the upside, right? So it went inside bar and down on Tuesday. There's your down. It ended as green day. So today at one point, we actually had a higher high. So it actually broke above Tuesday's high. And it looked like we could have done an inside bar reversal to go back up and try to fill this gap. But then, of course, the Fed news came out, and that changed the entire roadmap. And that basically came back through the range, took out that low, and then took out everyone who had gotten long all the way in here, right? So you can see anyone who got long all the way in here was stopped out. See, so this low here is lower than that low, but not lower than that low. So they did a really good job of basically wiping the board clean here, and that's what you get when you have these wide range outside bars. Qs, same thing. Not an inside bar reversal day, but still a wide range bar. With the Qs, we have this situation now where they defended where they needed to defend today. So they defended on the quarterly open, but now for the new month, because July closed as such basically a doji candle, it would not take a lot for the sellers to step up if they had the aggression to take out that low, 187.56, right? That puts it 188.38. That puts it right there. So you're not that far away now from this thing taking that out and then going back into this range again. So again, once it cracks below that quarterly open and it closes below there, you get that full time from lane to the downside, and that's when you really need to watch out. The Russell had been outperforming, but I'm always skeptical of the Russell because it's been lagging this entire rally. So past few days, you had some good days. Yesterday was a huge outside day, but it went inside, outside, and then up, but back into the range. So that looks kind of bullish, but if it breaks below there, all this comes into play, and that negates any of the kind of break to the upside that we had previously. Because this is what's the problem with here with the Russell, and you can see it in the daily chart, and you can see it on the weekly chart. On the daily chart right here, that black kind of dark line there, that's the monthly and quarterly open, and that's been acting as resistance, right? We can see it right there. That's the open of the month, okay? And you can see here it's tapping it, but it cannot stay above it. So today cracked above, came right back into the range again. I really thought that we're going to eventually get to the point where we're going to be able to take out May's highs, but the Russell, it hasn't shown the continued strength to push it back up to May's highs yet. So the Russell here always does a really good job at faking people out near highs. Because if you look at this here, here's an outside bar that goes up the next day, followed by coming back in the range. It's not exactly the same, but is reminiscent of this situation here back in May. Once you get an outside bar, that brings in a lot of aggressive players because people are getting stopped out on both ends of those bars. So back in May here, if you recall, the SPY actually was selling off at the beginning of the month, but the Russell continued to make new highs. That was the interesting thing, was that the Russell was making fresh highs here, outside bar day, and it looked very bullish that day. But look, the next day changed the entire picture because it went outside bar and down. It opened up here, right in the middle of the range, but then went down, inside bar, and the rest is history. May was a really rough month for the Russell. So continue to watch the Russell here. If it breaks below this low right there, then you got to watch out, because then it puts the rest of this range into play. So here on the weekly chart, goes outside bar and up. If it breaks below that low right there, then it puts that low in play, and then potentially lower. Finally, the Dow. Watch the downside, right? As I said, this past weekly market outlook, in the past weekly market outlook video, the Dow last week actually created a lower low. So the 7 consecutive weeks, it never went 7, went 6, because last week it actually made a lower low. This low here is lower than that week's low. And this week here, it's now created a new low, right? So it's coming back down through the range again. And so we got a new month coming tomorrow, outside bar and up, right? And it's really close right here. Would not take much. If it cracks below the quarterly open, which it's sitting on right now, it's sitting right on that quarterly open. If it can break below 266, right there, 266, that puts all this range into play, puts June's lows into play. And so that is an issue for the Dow now, as it's lost momentum last week. The daily today, big outside bar to the downside, right? So big outside bar popped up, and this is basically inside bar reversal, and it's tricky too because they really get people here, because it goes inside bar and up. Oops, it goes inside bar and up on Monday, and then it goes inside bar reversal here. So it goes inside bar reversal to the downside, but today it popped back up again. So it popped back up, not quite high enough to take out that pivot high, but definitely anyone who got short down here, they were feeling the heat. They may have covered early. You may have covered because you didn't want to sit through the potential retracement back to the upside, just to come back down again with an outside bar, boom, to the downside. As I said though, with the SPYs, Qs, and Dow, they're defending the quarterly open right now. So tomorrow, Thursday, we want to be watching. Do they hold that quarterly open, or do we trade below it and stay below it? So an example today, a good trade that I took today, was on Apple. And Apple had everything going for it today, but did not have a good close. So another good name to watch today. As I've been saying, Apple was a great name going into earnings. Going into earnings is just basically sitting right on this 8-period moving average, just trending its way up, higher and higher. Today gapped up, was it 4 or 5% on the gap up, but it could not hold the gap. So right from the morning, right from the get-go, well, that's not true. It did go trade higher slightly, but then once it came down and took out the open, it started to get weaker, and it got a lot weaker after the FOMC meeting or announcement. So as I mentioned in the weekly market outlook videos, we had this scenario here on the monthly chart that it went outside and down, right? And I said as soon as it cracked above last month's high, that pivot is in play. And I said there's a very good chance, going into earnings, you're going to get this pivot taken out. And we got that, today when it gapped up, it covered that, it filled that, took out that range, took out any stops that were there. So anyone who got short and was holding and hoping that it wasn't going to take them out, it took them out with, with plenty of room to the upside. It took them out, and then came back in again. So here's the thing with the Apple, was a really nice intraday trade. So if you look at the 15-minute chart here, there's some great opportunities to get short, and one was right after FOMC. So here's FOMC right there. So 2 o'clock, there's your FOMC announcement, and you'll notice, a lot, if you go back and do your homework, a lot of FOMC announcements, you'll end up getting outside bars. So you'll see a lot of outside bars during FOMC meetings, because there's a lot of range that typically happens. It's either you get a big upside push and then a downside push, or vice versa. You'll have a downside push and an upside push, just a reverse again or reverse the other way again. And so typically my thing is I like to typically wait for that initial push to get out of the way, and to wait for that first outside bar to get created. And so I waited for the outside bar to get created, then we got an inside bar. And so there it is. Outside, inside. You can take that to the downside right there. Outside, inside, to the downside. Okay? And so there, that goes all the way down to the low of 211.36. And I actually had my order waiting a little bit lower, so I did not get filled. I think I had an order waiting at 211.27, and so unfortunately I did not get filled all the way to the downside here. So I had to cover in this range. Had to cover that. Then it went inside bar, and then went inside bar and up. Okay, so then inside bar and up. So actually, just to show you that it was a really nice trade there. So there to there, it was a plus 5R trade. It went as far as plus 6R, and I covered somewhere around the plus, I want to say the plus 3.5R range. So not bad for a 15 minute interval trade. Then it pops up, goes inside bar and up. As soon as this low gets taken out, that's an inside bar reversal to the downside. Now you can definitely take this here on the 15-minute chart, but you might want to get some extra juice out of it by looking at a lower time frame. So if you take a look here, I'll go back on the higher time frame. It goes inside bar reversal here, right? So what you're looking for here is it goes inside bar and up. It goes inside bar. If this low gets taken out, then this pivot and that pivot goes into play, and that's what you're looking for. So in the 5-minute chart, you're waiting to see how 214.27 gets taken out, and you get the outside inside on the 5-minute chart, right? So you go outside inside and down, and that closes right to the lows to close out the day. So going back to an earlier picture here, going back to the 5-minute chart, as I was saying about the FOMC meeting, here's the FOMC announcement at 2 o'clock. There's your outside bar. In fact, we had an outside bar going right before the meeting at 1:55. People were jockeying around. Then at 2, it went red outside bar. And then it went outside bar and up. Inside bar, and then back down. That's a nice short as well. Outside and up, inside bar, and once this low gets taken out, it's going down. On the 30-minute chart, again, very good to see the different time frames, but very, very nice as well, because you had the same side of scenario here. Outside, then you want to see how this low gets taken out, right? And that was, if you recall, that 15-minute setup, because there, 2:16.55, we go on a 15-minute chart, that's right here, right? So there's your outside, inside. If this low gets taken out, they're going after that pivot, that will crack that 30-minute outside bar, which will cause the momentum to the downside. And so you get that momentum to the downside there on that 30-minute bar. All right, so hope this is helpful. Again, the big message today is we've got a fresh month coming up tomorrow, August the 1st. So watch to see if the quarterly opens hold. If not, watch your downsides and cover your risk. Happy trading.